One can have no smaller or greater mastery than mastery over oneself. Leonardo da Vinci. What excellent advice that is. Mastering ourselves, that's what it comes down to as an investor or a trader. Knowing what you know, knowing what you don't know, knowing what you can rely on, and following price, not paying attention to anything else but price. That's the bottom line. Now, of course, we'll use all of these charts to help us, but the bottom line is projecting price movement. That's what we have to do. Regardless of what you hear on the news, regardless of what you think, what are the charts telling you? That is the bottom line. Let's jump into these charts today. Man, everything up for the day, a wild day. We see everything up above 1%, most everything, well, it's up around 0.12, 0.16. We'll go through these charts and see what we see. With the update today, look what we see happening. We see the price percent oscillator pushing through the red signal line here on Thursday. Of course, we already had the derivative oscillator positive. Look at the kind of candle we have, though. A red open box candle means a slowdown in the up movement. Little wick on the bottom, a longer wick than the candle itself on top. And again, trying to push through at least the wick through the 2-day trend line. Not a super strong candle, but again, what do we rely on? Our price percent oscillator. So again, important stuff to always keep in mind. We do have a great training for you today. The training is use your knowledge, not your emotions. That is a great training for today. If you're a subscriber, you'll see it in your show notes. If you're not, go to chartingwealth.com and sign up for free. chartingwealth.com. Going to go from the weekly to the 2-day. What do we see there? Well, this sideways slide is continuing. We haven't hit a higher high than we did back on the 29th. And again, the latest 2-day candle has finished forming. We can redraw that candle, although it's just going to flatten it out more and more. And again, doesn't help us out a lot the flatter things go. We see the price percent oscillator continuing to move up, but it has lost a lot of its upward speed. We see the derivative oscillator continuing to lose momentum. The price percent oscillator is still going up. We can say it's pulling away from the 200 period moving average line, but again, not reaching a higher high than we did all the way back last Tuesday and Wednesday. I'm talking the 28th and 29th of April. So again, we'll continue to watch, see what's going on, how these charts lead us. Look at that 4-hour chart. Even with the up movement over the day, still hasn't crossed over going up. Derivative oscillator still negative. So we'll watch, we'll see. We'll let these charts lead us as we get to the end of the week. Now, what's the winner continuing? The Qs. We had the weekly vertical crossover. I don't know anyone that felt super good about it, but look how good it has been. What's it up about? 5%, 6%? Higher high, bigger, the candle reaching a higher high and the wick. And again, it's good to see. I mean, again, once again, the magic of the weekly vertical crossover. It's just, is it not amazing, folks? They tend to work again and again and again. We see the 2-day chart again, the derivative oscillator losing momentum. That price percent oscillator is moving up still. We have a bigger candle reaching a higher high, which is good to see. Again, it's been a great trade so far. And again, those of you who jumped into that practice trade, again, use your common sense and whatever you set up as far as your profit and loss bands to take profits at the appropriate times. See the 4-hour chart up in the morning, a little further up in the afternoon. We saw it cross over. For those of you who were waiting to jump in, the 4-hour finally crossed over. You're, of course, late to the show at this point. But again, nice to see what it has been doing. We'll see how much longer this move continues. And who knows, in today's world, like we said, with our Corona investing training that we had, you can see things recover up to 3/4 as the bull trap is set. If things go based on history. I know this is an odd time we live in with all sorts of QE forever going on and money printing and the plunge protection team and the world banks working together, world central banks working together. We'll see. Reality always does check in at some point. So we'll continue to watch. Things are going great in that trade. Again, just goes on to the consistency and the magic of the weekly vertical crossover. Now we go to 20-year bonds, hoping that we would see these getting closer to a crossing over, but it's just not happening at this point. We don't see the price percent oscillator crossing over yet. We see the derivative oscillator going negative. We see a red down candle for the week with a wick that's about twice the width of the candle itself, solid red. So we see that happening, but we haven't had that crossover going down yet. We go to the 2-day chart. Of course, it crossed over going down all the way back on the 13th, then banged off the 21st and the 23rd. Those two 2-day candles banged off the red signal line and continues to accelerate away on the price percent oscillator, derivative oscillator gaining downward momentum. A much bigger red down candle just seems to be gaining steam going down. We go from the 2-day to the 4-hour. And of course, that's where we see the up movement on the day. We saw up movement in the morning, followed by the most up movement in the afternoon. So we'll continue to watch, see what there is to see there, and whether or not things are just going to rotate back over going up. We would expect, of course, bonds to move in opposition to the market, to the stock market. So a bit of a screwy day there where that doesn't happen. Same with gold. So we'll see how things shake out on Friday and just what occurs. That's where we are on bonds. What do we see happening as far as gold goes? Gold up for the day 1.54%. Derivative oscillators finally looks like it's turning positive this week. The reason they look like it's turning because we don't call a candle till the week is done. But even with this week, a green spinning top forming so far open box, which is always a good sign. We see that we've not gotten anywhere near the high that we reached of $164.42 all the way back on the week ending April the 17th. Where are we? 161.96 is the high. Price percent oscillator is continuing to move up. Like we said, derivative oscillator is positive. We go to the 2-day chart. That's where we see this sideways slide, sort of sliding down. We see that 2-day, is it going to cross over going down? Derivative oscillator already didn't make it through a crossover today. The next chance that will of course, be on Monday at the close of the market because Friday's a day, Monday's a day. Those are 2 days that make up a 2-day candle. But it is interesting that we're sitting right there pushing through the weekly trend line, and of course already violated a ways back, about 8 days back now, the 2-day trend line. So we'll continue to watch, see what there is to see on gold. That 4-hour chart, it's trying to cross over going up as the 2-day's trying to cross over going down. Whew! That is quite interesting. We'll see what tomorrow holds. How many of you are going to be brave enough to think that you might jump into an up move if the 4-hour crosses, even with that momentum trying to carry the 2-day over crossing down? Might be interesting. Might be a good learning experience for a practice trade if that does occur. And the reasons you give for doing it to yourself and what you record on your trade worksheets. Don't forget in your show notes every day, whether you're a subscriber or not, if you'll look in the show notes at the YouTube channel, in the email that subscribers get every day, or at chartingwealth.com in the show notes with every video, you will see, and also for folks on iTunes, you will see a link to a PDF for the trade worksheet and daily market worksheet, weekly market worksheet. Hope that you are using those. In fact, at the end of today's video, I'm going to attach the instructions on how you use all 3 of those. They will all be there along with a video about our book if you wish to buy it. We've been selling lots of them here lately. Thank you so much for the support. And again, great call yesterday with all the Patreon members. Folks, we've wrapped up things for all of you who just tune in for those 4 ETFs that we have covered for years now. If that is your learning experience and that is what you want, you are done for the day. We so appreciate you being with us. Thank you again for all your support. Please make sure to subscribe to the YouTube channel there on the bottom right-hand side of the screen. Helps us with our metrics. And of course, go to chartingwealth.com, sign up for the daily email. Won't cost you a thing, but will give you lots of good stuff. We're going to move on now to Bitcoin. Look at Bitcoin up 3.10% for the day, and look how things are flying as that weekly vertical crossover is taking place. We see a big green up candle. The biggest one that we have seen, gosh, going all the way back. Well, in fact, even back with the last few green up candles, they aren't as big as we've seen this week. The last time we saw a green up candle anywhere near this size was back in mid-February of this year. So Bitcoin trying to recover what it has lost. I mean, look at what we started covering where Bitcoin hit a low of $5,118.95 after a high of $10,323.26 back on that same week, the 14th, ending the 14th of February. I mean, it lost 40+%, 49%. So again, really got hammered. And look at how much it has gained back. Amazing. Again, up for the day, 3.10%. We go to the 2-day chart. What do we see there? We see Bitcoin continuing to take off and accelerate. Another big green up candle. Price percent oscillator heading up. Derivative oscillator heading up. 4-hour chart continuing to move up. Just barely, just right there with the red signal line, but is moving away from it up in the morning, little further up in the afternoon. Nice day for Bitcoin. Nice week for Bitcoin. Very nice. Now, we're going to leave Bitcoin, go to real estate. Real estate up for the day, 1.43%. Now, again, real estate sliding sideways as we can look on our chart. Price percent oscillator about flat. Derivative oscillator losing downward momentum, is getting smaller and smaller, maybe flipping over soon. We go to the 2-day chart. And of course, we just see this sideways slide all the way back to the 9th of April. Just been sliding sideways most of the month of April now. So, well, at least for a week, I guess. And so what we will do is, wait a minute, that's not April. It's most of April into May. Well, I'm still stuck in April, folks. I'm sorry. But sliding sideways for quite a while on this 2-day chart. And we go to the 4-hour, and of course we can see, has real estate, we keep talking about, has it bottomed out? Is it going to try to move up? Well, the price percent oscillator still flat, maybe a little down. Derivative oscillator still negative. 1 day of up movement for real estate, even a 1.43% day, is not changing where we are. Real estate flat, sliding sideways now, going into the 5th week. Now, at least it's not hammering down now. That's better news. But look at oil down. It's the only thing of any of these charts we've looked at that's down, and it's actually down more than anything was up for the day, 1.87%. We have a solid green candle, which means a slowdown in the down movement, but that price percent oscillator still heading down. Derivative oscillator still losing some downward momentum. We go to the 2-day chart. We can again see where it is a green open box candle with no wick on the bottom. It's awfully tiny, but again, better than a solid red down candle like we saw for many, many days in a row. We go to the 2-day, from the 2-day to the 4-hour. And of course, that's where we saw things sort of top. Actually topped, well, it actually did okay in the morning on Thursday, but then lost it there in the afternoon as far as our average pace Heikin-Ashi candlesticks go. Price percent oscillator also lost some energy. It's right there on the 200 period moving average line. Derivative oscillator green, but losing energy. That's where we are, folks. Everything up but oil, almost down 2%. So oil just keeps getting hammered. What does that mean for our economy? So much of it energy-based. Well, we shall see, shan't we? We'll continue to watch, continue to follow these things. Make sure that you're with us tomorrow where you can fill out that weekly market worksheet. We'll do our comprehensive review and forecast. God bless you, my friends. All the best from the whole team at Charting Wealth World headquarters.